Hello and welcome to our February Index webinar. I am Kent McDill, Senior Writer here at Spectrem Group, and with me is Senior Consultant Kathy Dordick. Our topics today are the highlights from the Spectrem Investor Confidence Indices for January, as well as our new study, Wealthy Investors and the Use of Digital Tools, which examines the way investors use mobile technology to interact with advisors and to research investment decisions. I'll begin with a discussion of the January Affluent Investor Confidence Index, which in January started the slow climb up from a December meltdown. In December, a volatile stock market was pointing downward and more than 2,000 points was lost on the Dow Jones Industrial Average in 1 month. January brought the month-long government shutdown, continued confusion over America's trade relationship with China, concern over newly discovered North Korean nuclear facilities, and whatever is going on between Europe and the United Kingdom. In December, the Spectrum Affluent Investor Confidence Index dropped to -5, the lowest mark since August of 2013. In January, the SAICI tried to recover by moving up 2 points to negative territory to -3, which is still in negative territory, and it's been in negative territory for 3 consecutive months. Meanwhile, the Spectrum Millionaire Investor Confidence Index for investors with $1 million or more in investable assets moved up in January from 1 to 2, avoiding a fall into negative territory itself. And as this chart shows, the year-over-year results from the Spectrum indices show a severe downturn. If you look at the results in August, you can see that the indices spiked a little bit, and we've been going downhill ever since, or it's been going downhill ever since. Since August of 2018, the SMICI has dropped from the 20 down to its current level of 2. The SAICI, which is usually less volatile than the SMICI, has also seen a 6-month slide into its current negative stance. Unlike in December, when all the confidence index indicators were down, there was a slight improvement in stock and stock mutual fund investing in January, and both millionaire and non-millionaire investors increased their cash investing. Such a move indicates a desire to invest, but uncertainty about being further involved with equity products. In January, there was also a decrease in the percentage of investors not investing, which are those who are either going to maintain their current level of investment or decrease it. This means that more investors were coming back into participation in the markets, even as they prefer safer products over equity investing at this time. The Spectrum Household Outlook, which asks investors to consider the impact of current economic conditions on 4 components of household finance, again fell in January to 10.9, and the last time the outlook was that low was in October of 2016, just before the last presidential election. The outlook, which traditionally sits above 20, has not reached that number in the last 4 months, and is at 1/3 of the level it was at in September, when it was at 30.2. Prior to its fall in October, below 20, the household outlook had not been below 20 since June of 2017. There's a lot of red on this chart, indicating that most investors have lower outlooks for the 4 components that influence their household financial situation. The only slight rise in the outlook was the outlook for the economy, but that's measured against the fact that the outlook for the economy in December really tanked. The outlook for the economy has been in the negative range among all investors for 4 consecutive months, and the last time that happened was in November of 2012 to February of 2013. Now I'll turn our presentation over to Kathy Dordick to discuss our report on the use of digital tools.
Thank you, Kent. Recently, in the fall of 2018, we conducted a study looking at the use of digital tools. The last decade has resulted in a significant change in the way individuals communicate with one another. Texting, instant messaging, and other digital capabilities were non-existent a decade or so ago, and we have seen a significant increase in the manner in which investors utilize these tools. We're going to start looking at this report through the use of our Spectrum's Visual Analytics tool, which is an online interactive dashboard that allows users and subscribers access to Spectrum research that is able to be filtered with a number of different options. So looking at The first component we want to look at is interest in an advisor provider that has online-only banking. So over here on the right-hand side, there's a 33.99% interest in online-only banking. That difference changes pretty significantly when you look at age. If we were to go over here to the age filter and select millennials, where we're only wanting to look at their preferences, and we update this information, it would go from a 33.99 to a 48.82. Another significant difference you would see is interest in investment services or financial advisory services from an online-only bank. When looking at the concept of investment services, again, online-only banks, the overall interest was 26.97, whereas younger investors continue to be far more interested. With digital tools becoming more commonplace, we asked investors if they have an advisor they have not yet met in person. 13% of investors have an advisor they have never met in person, but that percentage dramatically jumps up to 29% when looking at millennial investors. We also looked at how investors research financial information. Reading an article was the most favored method of research, followed by talking to a knowledgeable person. That is regardless of age. However, younger investors are far more likely to watch a video as a component of their research process. When we're looking at millennial behavior, again, they are the most likely to read or view financial blogs posted by financial or investment firms on any platform. The most common location investors will read blogs is on the website of their financial provider, followed by websites of major financial media sites. This is important for advisors to be aware of because their clients are going to those websites and looking for blogs to gain information. Telephone continues to be the most common way investors have and continue to prefer to communicate with their primary advisor. Meeting in person and emailing are ranked second and third respectively. We are seeing an increase in texting, video chat, and social media, so we are anticipating that to increase over the next upcoming years. If you found this data compelling, you'd want to subscribe to our Wealthy Investor series. Some of the upcoming reports include defining financial planning and the impact of parenting on financial issues. And again, what you saw earlier, another component of that Wealthy Investor series subscription is Spectrem's visual analytics. That again is our online digital interactive tool that allows access to our research, able to be filtered by a number of different criteria. That's it for this month. Thank you so much for watching.
Perfect. Thank you, Kathy.
Sorry, mine sucked so bad.
No, that was good.
Threw me off.
No, it's okay.
Kent can recover better.
I am going to go